So I'm going to walk you through the 4-1 working together and on your own. If you want to, feel free to skip this. Otherwise, you can even go to the end and use it to just check your answers. So here we go. In the first problem, we're looking to create a chart of accounts for Clara Ross's service business called Ross Company. So the very first thing that we'll do on a chart of accounts is determine which side is the balance sheet side and which side is the income statement sheet side. I think it's easiest, just remember this goes in alphabetical order. So I'm looking for balance sheet accounts, which would be right here. And I'm going to drag that all the way to the top left, which means our income statement is going to be on the top right. The next thing I'm going to do is organize my accounts by my general ledger divisions, and this is the order of the accounting equation. So assets equals liabilities plus owner's equity. So I'm going to start with 100, and I'm going to go assets, and then I'm going to work my way down. So assets equals, then I want liabilities plus owner's equity. And so that brings me down on the left. And then on the right, I'm going to break down my two types of owner's equity. So the first type is the one I like more. It's when I make money. That's going to be revenue. And the second type of owner's equity is going to be expenses. Now I'm going to fill in the different account numbers. So it's really easy. I've given you the general ledger division. These are 100s. So I'm going to go in order by 10. So the number comes first. So I'm just going to do 110.
I'm going to do 120, 130, 140, 150. Then my liabilities is the 200 section, and again, I'm going by 10. So 210, 220. Owner's equity is 300, so I've got 310, 320. Then I'm moving on to 400s for revenue, so 410. And then I'm on to the 500s. So now I'm just doing 500, 10, 20, 530, 540, 550.
Remember, we'll always go by tens to start. And now I'm going to fill in my accounts. So assets, we've been doing this before. This goes in our CASP order. So the first asset is cash, so we'll drop cash in. And then we have accounts receivable. Now there are two accounts receivable. When there is more than one, we just go in alphabetical order. So Megan Alvarez comes before Tyler Link. M comes before T. So accounts receivable, Megan. Accounts receivable, Tyler, and then I'm on to CASP. So I'm on the S, which is supplies. And then the P in CASP is prepaid insurance. The only type of liability I'm going to have is accounts payable. And again, if there's two, I go by alphabetical order. So M comes before S. So I'm going to go accounts payable Mid-City Supplies first, and then Shearer Supplies second. There are two types of owner's equity. The first is going to be our capital account, so Clara Ross Capital, and the second is drawing. Another easy way I like to remember this is I like to make CDs. Okay, the only type of revenue account we will ever have is sales. That's when I make money from a sale, so I can drop that in. And then the expense accounts are just listed in alphabetical order. So automobile expense, that would be my first with an A. And then the next up is I. Next in the alphabet comes M. And then R. And then S. Finally, I'm wanting to assign account numbers to postage expense and utilities expense. So I'm going to take a look here and I'm going to see where they would fall alphabetically. So in the alphabet P for postage, that would fall in between miscellaneous and rent. So I need to put it in between these two numbers. So in between 530 and 540 is 535. The next is utilities, and if I take a look at this, in the alphabet, U would come after S. So because there's no other account here, I can continue assigning by tens, and so I'd be 10 plus the last number, so 560 would fill in there. So that's the drag and drop version. Now I'm looking to open cash in this account. So I'm just dropping these buttons where they belong. So the number goes with the number, and the account title goes with the account title. And that should take care of working together and on your own.